Hello everyone, this is Juan Sarmiento and today is Friday, October the 28th. Okay, let's start with each one of my trades that we have open and see if we need to adjust them. And then I have a selection of 5 potential trades that we will look from scratch. Okay, I haven't made up my mind if I'm even trading it. Okay, so let's take a look at Disney. Go to the Analyze tab and look at the risk profile. Okay, that's very bullish with 81.76. November 4th is the expiration. That's a week from today. And that's a put, 120 put. Okay. As far as the calls, we have 8 of those. Okay, that looks like a sort of lottery ticket, because is it going to go to 120? It seems unlikely. And if I were to sell calls, let's say sell even one, just one call expiring next week, that's next to nothing. Okay, we could sell November the 11th, and that's 39. It doesn't make sense to do anything, and I honestly think that these are pretty much out of the money. The puts here, we have 2 puts at 94, 95, so this is probably out of the money. It is out of the money, but I'm saying probably not much value. It says $1.25. Okay, so the stock will have to either go down to 95 or to 120 for us to make any big deal about it. So I'm going to leave this until next week. Okay, for now it's positive, it's making not much money, but if Disney jumps to 120, we will. Let's take a quick look at a chart. Okay, the earnings are coming up on the 8th of November. So next week, we could wait until next week before closing this position. Okay. Why? Because anything can happen. Okay, could it go to 120? Yeah, that's a possibility. Very rarely you would see sort of such a move. Okay, let's go to GS. Very strong move up. Let's take a look at the Analyze tab and the risk profile. Okay, we have just the stock. Okay, do I want to keep 200 shares of GS? Not really. I would consider a trade on that. Okay, let's look at it, the possibility of a trade. The volatility is low. They reported earnings and the earnings were rather good. Okay, so you calculate, let's go through the process of thinking how much was the earnings beat? 7.4 versus 8.25. So you use your calculator. If you don't have a spreadsheet, I'm going to use a calculator here, just to try and go quickly through the process, okay? Without the spreadsheet. If you have the spreadsheet, use it by all means. Okay, so 7.4 minus 8.25, it will be the opposite, but that's 85 cents, and divide that by 7.4, that's 11%, okay? 11% is great. It's more than 10%. So it's a 10% earnings beat. Says I want this trade. Okay. Then we see the volatility. Is it volatile? Is it volatility below? Is it close to the lower end of its range? Did it go down with the earnings? Yes, it did. And now the stock has moved here from, in the last little while, from 287 to 340. Okay, so that's a big move, more than 10%. So that's another big plus on. And so let's go to the spreadsheet here, to the Analyze tab and enter a trade. I'm going to look for back month. It couldn't be 84 days. That's the January, 84 days to go. So I would say we would use the March, and the strike price will be 340 because that's the current price. So I go over here and I say analyze by custom and Gini. I have shown you how to create this in the past, so use that in the trade format. Meaning, when you come here to the trade tab, you say add simulated trades. You say no, it needs to be in the trade tab. Sorry. You come over here and you say on the March 17 by custom, and then this is your formatted, that's your simulation trade. Okay, we created that here in the past, so I have it named. Or you can save it if you want. Order template. Okay, so you create an order template, that's what you do, and once that's created you can use it as I just did. Okay, check other videos or ask me and I would explain it next time. Okay, I'll be better prepared because it's a little complicated to generate that, and at this moment I just don't remember, but it can be done very easily. Okay, so here's my trade, and I see that I have 34%, 27, 29, and 28. So these numbers you need to calculate. Let's use the calculator again. Okay, let's clear the paper here. And I'm going to average the volatility for the March options. So we have 34.2 plus 27.84, divide that by 2, and that's the average volatility is 31. Now we're going to calculate for the December, that's the front month options, 30.05 plus 28.58. Obviously these things are changing, so we do the best we can and divide that by 2, and that's 29.315. Okay, so let's save that, memorize that, clear, and then we use the back month is 31.02 minus memory recall equals, not what I was expecting. Okay, let's just do this, 31.02 minus 29.315. The difference is less than 3% volatility, so that's acceptable. There's a volatility skew. Oh, I went to 34 already. Okay, yeah, 34 and 27 is a little high on the call side, but on the average it's okay. Okay, so we would do this trade and we would sell the call. Now I create this trade, create duplicate order, and it's 77. You can confirm and send just to see the price, $7,000. Is that 10% of my account? Yes, it's actually less, so that's acceptable, but we need to sell that 100 shares that we have, or 200 shares. So let's sell that before we enter the trade. And do it at the market price, but lock it into an order, and then we do this trade here. If I were to make 2 of these, I would simply say multiple, and I have here 1. If I said 2, it would be 15,000, which is too much more than my account. So 1 would do, and send that. Okay. Okay, so now you know the general terms too, and I have shown you one of my 2 trades. There are 5 trades. Let's go to another one here, Caterpillar. And so the first thing, we go to the chart and we see, wow, they reported earnings. It had been growing, and then today and yesterday and today, they beat expectations again by a wide margin. And we calculate 3.186 and versus 3.95. So calculate the actual was 3.95 minus 3.186. Difference is 0.764, and divide that by the expected. And that's a 23% better than expected. So that is definitely a candidate. Volatility is below 30, okay? So we see, go to the trade tab. And once again, we're gonna use our template, and we're gonna do Caterpillar February. Okay, we can buy 120 days to expiration, 112. And the strike price would be the closest to the current price is 217, so we can use 220 and say buy custom, and we're going to say Genie. Okay, if you have not created that, again, you ask me and I will make a separate video about it. Okay, here it is. 36, 29, 34, 29. It's probably okay. Let's see. Again, the calculator. We average the, let's clear the memory. We averaged it from the back month, 36.23 plus 29.53 divided by 2, 32.88. And the back month, the front month, let's save this, okay? Memory clear, save that, 32.88, and then we 34.71 plus 29 plus 17.17 divided by 2, okay? 31.94 minus memory recall equals 94, okay? The difference is 1%. So that's acceptable. You can see 31.94 versus 32.88. So yeah, we can enter this trade. And can we do two of these trades? Probably. Create duplicate, confirm and send, and let's say multiple, because then, yeah, one is 4,417. Two is almost 9,000, and we can make as much as 10,300. So let's do that. Okay, and we just wait until that gets filled. Great. Let's move on to the next. So we have Caterpillar and GS. Let's go to IBM. Fantastic. You see the move after earnings. The earnings was 1.81 and the expected was 1.776. So that's not that big a change, okay? Just the same calculator. 1.77 minus 1.81. Yeah, that's very minimal in percent basis. Nevertheless, the stock is moving rather strongly and the volatility is low. Okay, so we have the earnings wasn't that good, but the stock is moving anyway very strongly. You have to read the news and see why is it going up so strongly if they didn't beat expectations by a wide margin. Well, look at the day of the earnings was on the 19th and see if there is a reason for it. There must be a reason, and it may be like they raise expectations or something like that. Okay, so all this is IBM after all. There is a lot of information on it. It says higher fiscal year 22 revenue expectations. Yeah, that's the kind of thing that would impress people enough to bring them back to the stock. And you would see all the details related to earnings here. And so if there is something like this, raise guidance or revenue expectations are higher going forward, and this is what I'm talking about. IBM beats on earnings and revenue and hikes full year revenue outlook. Yeah, that's the kind of thing I'm looking for, and that is great. That's exactly what I'm looking for in order to enter the trade. Volatility is low, okay, already here around 24. Let's see if there is a proper volatility skew, and we're going to go to February as well, and we're going to trade the 140 or 135. Let's do the 140. You can compare them if you want. The 135 versus the 140, okay? Let's try this first. It looks sort of funny looking. I don't like that it's sort of skewed a little bit towards the negativity. Let's see if we do the 35, okay? 135 here by custom Genie. That's the caterpillar got filled. Okay, that's a little better, and the delta is slightly positive. I like that better. But look at the prices as well, the volatility skew. And perhaps one is better than the other. Again, 27.8 plus 24.47, okay, divided by 2. And let's clear the memory and add that. Let's see. Show paper somewhere. Show paper, so we can keep that in mind here. That's the number 26,135, and let's do the front month is much lower. Okay, so that's not gonna work. So let's do the 135. Okay, I'm not even gonna try this 140. Let's close that, and let's do the 135. Okay, 29.1 plus 25.74. Oops, not working. Clear that. 29.14 plus 25.74. Divide that by 2. Okay, that's 27.44. How about? Yeah, it's very, very wide, as you can tell. 22.39 plus 23.92 divided by 2. Yeah, 23 versus 27. That's like 4%, more than 4%. Okay, that means it's too big. It's too big. The skew means the front month options are cheap, which means we're not going to get much money from them because we're selling them. And the back month are expensive, so I would avoid this. Okay, so not IBM is not in the group. Let's take a look at GPM. GPM, JP Morgan. Yeah, you can see the earnings here. Oh yeah, 2.9. 6 versus 3.12. 2.96. Okay, so again, calculator. Let's start with the big one. 3.12 minus 2.96. Difference of 16 divided by 2. 0.96. That's the expected. That's about 5%. It's not impressive. It's not impressive. Okay, but again, like in IBM, the stock goes up anyway. So that's, you would look at the reason for that on the news of the day of earnings, and you would see that it's probably 10-14. It probably gives you some kind of indication that going forward they expect better earnings. Okay, look it up. In the meantime, I'm just gonna trade. I can't be here for too long, so let's just move on here. Let's look at we would have to go to March, and the strike price would be 25 by custom Gini. Analyze that. Okay. This is very similar. It's higher in the call side. Let's clear that up and enter 34.84 plus 26.38, divide that by 2 is 30.61. And the front month is 31.61 plus 26.37, divide that by 2, okay? Minus memory recall equals 1.62. Okay, less than 3%, that's adequate. Okay, so we can definitely trade this one. And folks, if the market begins to tank again, we will make money with this guys because volatility will increase. And we're going to say confirm and send multiple, so we can easily count our buying power effect by increasing the number of trades. 3 will have to be, and it gives me $8,385 in cost. Let's send that off. Okay, and I will be watching for those. And then the last one is Apple, which reported earnings, moving today very, very crazy. Big move. Okay, so you can tell that today is up 7%, but it has been going up for a while now, and the earnings 129 versus 126. It's not a big deal. No, that's not a lot. That's 2%. So no, I'm not too impressed with that. Volatility is still declining. And yeah, I'm always interested in Apple, but no, this is not enough to justify a Gini trade, I don't think. Let's take a look anyway. February 155 by custom Gini, analyze. Yeah, 36.30. That's a little too high still. Okay, keep an eye on it. We will be back with it. Okay, and you can create a list. Potential trades. Candidates. Okay, we can delete all that. Edit candidates, that's what I want. Okay, I'm gonna remove all this. And we're going to add IBM and Apple in case we decide to have a second look. All right. And that's about it. Let's take a look at, let's see. Let's take a look at the trades that we are building up here. Okay, I'm going to change it to the GS should be okay. But I'm going to change the JP Morgan and just open, and that should increase my price, and I will increase the price until it gets done, unless for some reason I don't think it's a good idea. Okay, that's about it for today. Thank you very much for joining me, and see you next time. Bye bye.